All right, we're going to jump into a new video now. I've been putting out some content about having a lot more caution towards risk on, so I want to get into that a little bit. This is the new report that just went out over this weekend here, November 24th, which is tomorrow, Monday morning, when the markets open. It goes through a lot of that, and we'll talk about that here now. First thing first, though, just looking at Investors Business Daily. I think it's very easy, investors.com. I don't receive any compensation from them, by the way. They don't even have an affiliate program that I'm aware of. If they had one, I'd be happy to use it. I have no problem sharing their information with others. Done it many years. So anyways, right now, IBD, look, bottom line, they're at 0 to 20% is what they're saying. And the tagline they keep leaving up here is SPOOs and NASDAQ down sharply, undercutting October 10th lows. They haven't said we're officially in a correction yet, but that's where they're leaving it right now. I think that's a worthwhile thing to consider. The way I look at it is, look, I don't have the answers, and I'm not guessing what they are. I'm going to use information and tools that I know are effective. So, look, here's some things that worry me a little bit. There's several things. And one, bond vol's now bumping a little bit. Last time we saw this was when the Qs started to roll over. Something to consider. It's risen before and kind of gotten knocked down. We're not at these levels here in April. I'm not suggesting we are. We got a little bit of a bump here. IBD has shifted their tone dramatically, as I've mentioned. Credit spreads, especially tech credit spreads, are not tightening. They were tightening for many months into the rally. As the rally was rising, tech credit spreads were tightening as well. Now they're widening. They're opening up. That's bad. That's bearish, in my opinion. Bitcoin is a whole other topic. It's all in this report as well. But when we look here in risk on and risk off, we're seeing, first of all, NASDAQ right now, accumulation distribution D. We see a clear-cut break below the 50-day. You see put-call volume rising, but it's not at extreme levels that we've seen just recently a few months ago. So it is rising, though. That's just a broad look there. If we look at the Qs on a weekly basis, bottom line, money flows red, period, end of story. There's no other way of looking at it. It could reverse. There's no doubt about it. All I'm saying is right now, what the market is telling me and how I'm looking at it right now, that on the weekly, on the QQQs, the money flow is red. And we had a ginormous volume bar. Volume went up huge this week on a down week, closed about mid-range, but still it was down. There you see the action on a daily. Junk debt as well. It's not breaking down, but like I mentioned in the report, I'm going to be looking very closely this week at what happens here. What is junk debt going to do versus this potential area of resistance? NVIDIA, in my opinion, I mean, they're pulling money out of NVIDIA as fast as they possibly can. I know the headlines are suggesting otherwise, a great earnings report, blah, blah, blah. The money flow is red, and it's emphatically red. So, looking at all those things, plus the fact that here's the signal in private credit land. I mean, this thing's getting killed. It's under huge distribution here. It's getting absolutely slaughtered. That CoreWeave Oracle not looking so great. Bottom line, I'm tapping on the brakes. I'm heavy cash. I'm going to stay that way. And I've already activated some single stock shorts looking for more. This does not mean that I'm the most bearish person in the world. I don't think the market's ever going to go up again. I'm not saying that. All I'm saying is right here, right now, based on what the market is telling me, the information I have, it's telling me strongly telling me to be cautious and to maintain a high level of cash. I'm not shorting anything wild and crazy like Palantir. I put an example in a post that just went out this morning about the head of the snake and shorting stocks with a relative strength of 80 or higher, or otherwise other factors as well. So that's where I'm at. Cautious approach. I'm going to let the market tell me what's going on to see if I should be perhaps leaning a little bit more into shorts or preparing to reverse course and get long again. We'll see what happens.